Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Tata Digital becomes the sole entity for all online shopping verticals of the Tata Group after Tata Click operator Tata Unistore 2 comes under its umbrella. That's according to an Economic Times report.
Cab aggregators Ola and Uber are the worst performers across parameters related to fair work and conditions. As per a Fair Work India report, Ola and Uber scored 0 out of 10, with Dunzo and PharmEasy not far behind.
Customers file a class action lawsuit against failed crypto exchange FTX and its founder and CEO Sam Bankman-Fried. The lawsuit is the latest among a series of legal actions that seek to lay claim to the dwindling assets of FTX.
Instacart cuts its valuation for the fourth time in 2022. Once the world's most valued grocery delivery startup, Instacart now values itself at $10 billion versus $39 billion last year.
Tesla stock tanked 11%, slipping to its lowest levels in more than 2 years. This after reports that the company will continue a week-long production halt at its Shanghai facility due to a spike in COVID cases. Those were the headlines that we're tracking for you this evening. As the year winds down, on today's Investor Eye, we put the spotlight on 100x.vc, the firm which was founded in 2019. In its new investment model, aims to invest 125 crore rupees in 100 early-stage startups. The company has currently invested in over 80 startups after evaluating over 20,000 applications. So what's the company's investment mantra? Which are the sectors it's betting big on, and its outlook for 2023? To discuss this and more, we have with us Sanjay Mehta, the founder and partner at 100x.vc. Also joining me is my colleague Arundhati. Sanjay, welcome back to Startup Street. Now, at a time when India's startup ecosystem was going through a funding winter, you actually deployed more funds than 2021 with a new investment model. Run us through how this corporate venture capital model works and how did you manage to stay ahead of the funding winter?
Hey, thanks, Shruti, for having me here. So 100x.vc and corporate venture capital are two separate arms of 100x VC. We invest in as a first check into any startup with 1.25 crore check. And this is a fund which is a SEBI registered. And we also do corporate venture capital, where we work with large corporates to help them identify right assets for their category defining businesses, for new opportunities. So that both are different. For us, these are the best times to source deals, invest into startups. In fact, these are the times where the next giants of India will be born. So in fact, if you look into it, all the VCs who have been investing across over decades, I've been investing over 12 years. So we understand these cycles are going to happen, but these are the best times to get the discovery done across with startups which are going to be the future unicorns. So that's where we come across with the thesis. And we are very bullish on Indian startups. We invest in only India domiciled startups, and we are sector agnostic.
Yes.
We stick our neck out. We help these startups become viable or venture fundable with our program, which is called Home Run Series.
Right.
And we help them raise the next round of capital at 100x VC Pitch Day. So that's how the whole storyboard works across for 100x VC.
Right. So you're very, very bullish on Indian startups, and it's the right time to invest is what you're saying to us. Hi, Sanjay. Arundhati here. Just to look at some sectors, consumer and fintech sectors were the top funded sectors this year, according to a report by Traction. So as we head into a new year, what are the two sectors that look promising to you, especially in terms of wanting to invest into in the early stage?
So we are, I can't limit to two sectors, but I'll just give you a interest where we are coming from while we invest across in various, diverse sectors. For us, fintech remains across the big opportunity, we get across a lot of disruptive startups in the fintech space. We are looking at no-code SaaS solutions, right? No-code, low-code solutions are the next big ones where without programming knowledge, how do you build a tech startup, right? Or any company. So we have started doing investments in the same space. We are continue to look at the SaaS startups, Web3, and D2C still remains as a favorite for a lot of the VCs,
Okay.
including 100x, where we look into startups which are building category defining businesses in a brand which is niche and owning to dominate that space with a specialized solution for consumers. So
Okay.
that's how we are looking at various spaces. But digital health, which was there in last 2 years, we believe now a lot of investments have gone into it, and this is the right time to scale up. So digital health is
Okay.
something which we are very, very bullish upon.
All right. Sanjay, you mentioned fintech, and I want to talk to you about the sector. This year, we saw RBI stepping in with regulations around several aspects of the sector. Now, while this is a positive for the sector in the long term, do you think it will make investors think twice while putting funds into fintech companies? And with many fintechs re-looking at direct lending, do you think that's the theme that will drive fintech in 2023?
Shruti, I would put it in a different way.
Okay.
When a regulator steps in, investors are more confident because now we know exactly what's the road ahead, right? Once I have that inputs from a regulator saying that this is how the industry is going to shape up and this is how the whole story will work out for all the fintechs, I'm more confident and more bullish. In fact, a lot of the startups start building across into various spaces as given by the regulator. These are the opportunities and start disrupting into that spaces. And for lending specifically, I believe we have just scratched the surface. Fintechs have started working with various models. In fact, we are looking new innovative models in the lending space also. So I think it is just the starting of the fintech disruption story for India. In fact, I would go and extend myself. Will I see 100 fintech unicorns in India? Maybe by 2025 or 27, we should see 100 fintech unicorns in India.
All right, 100 fintech unicorns by 2025 is what you're predicting. But Sanjay, another major theme in 2022, and you mentioned this earlier, was Web3. Do you agree with the notion that India is emerging as one of the fastest growing Web3 nations in the world? And how do you see this sector shaping up going forward?
We have an amazing opportunity with Web3 to lead across. We have the best developer ecosystem, in India. A lot of engineers, a lot of engineering colleges, and this is the right time to take the Web3 story forward. We missed the Web2, the race in the Web2 side, but Web3, we are right here, right there, and we would definitely scale with a lot of developers around. And I think the infrastructure play in the Web3 is building up, and more applications getting developed over there will really work across. In fact, on 21st of January at 100x.vc pitch day, we are showcasing 4 startups which are in Web3 space. So we are really bullish with the Web3 space, and we believe there's a lot more to be done across in the Web3 space.
So bullish on Web3, but there's a lot to be done across the Web3 space. But Sanjay, tell us about your own portfolio this year. How many startups did you invest in? What sectors mainly? And which have been your best performing investments in 2022?
We are a very young fund. If I have to start from the backwards, we are a very young fund, started in 2019. So I wouldn't say these are the good or bad ones, but yes, we have seen a great portfolio outcome. At least our 80% of our portfolio have raised across next round of funding. At least 40% of them have raised the next round at Series A kind of stuff. And all our companies in this year where we invested across, we are having around 45 companies, and 25 we are showcasing on 21st of Jan. So we are a discovery platform. So a lot of the angel investors, family offices, VCs continue to look upon us as a credible deal flow for us to help them invest in the next round of funding. So once a 100x invests into any startup, it's like a social proof that this is a fundable startups, and other investors then would like to invest across. In fact, we have heard across a lot of the VCs and fellow investors saying that it's difficult to choose between the cohort because we present across, like in class 08, we'll present 25 companies. So they will have to pick and choose which companies they would like to invest in.
Absolutely. If you could quickly tell us, because we're running out of time, you've been experimenting with various investment models. We spoke about the CVC model earlier, and then there's iSafe notes. Are traditional ways of building a portfolio taking a backseat? Tell us about some of the new ways of building portfolios that we could see in 2023.
So portfolio construction remains across the same, where you build across minimum portfolio of 20 companies to get your capital back. Once you are at 2x, 3x, 20, 30 companies, the 2x, 3x starts playing across. iSafe is a mode of investments where we have simplified investing into a startup as a first check. So typically older investments were shareholder agreements, and it used to take at least 3 months to close the funding round. Here I can do it over the counter. And that's why we have pioneered iSafe, so that we can invest across and simplify the whole funding for early stage startups.
All right, Sanjay, we've completely run out of time, but many thanks for joining us on the show, and we wish you the very best. May you keep taking startups from 0 to 1 and beyond. Many thanks once again for joining us on Startup Street.
Thank you, Anunanditi. Thank you, Shruti.
Well, moving on, we see a new genre of entrepreneurs every decade, and currently we're in a place where capital is scarce. That's the word coming in from Utpal Sheth, the senior partner and CEO of Rare Enterprises, and in a conversation with Suresh Raju, the president of TIE Hyderabad, at the TIE event in Hyderabad, he added that it is essential to build strong unit economics, and for this, operating leverage and costs must be on the company's side. Take a look.
The life cycle of a startup, and like to get your views on how you think about it from incubation to scaling of a startup.
Over the years, we have been operating much more in the non-tech space, right? But some of our observations are that every decade or so, we see a new genre of entrepreneurs, a new thought process about business opportunities, business models, revenue models, and so on. We are today in a situation where until a few months ago, capital was abundant. A lot of the entrepreneurs today have not been exposed to situations where capital is scarce. So this life cycle that we are talking about starts from just being a venture and ends up being a company. But companies, in our experience, are of 4 or 5 kinds. One is what we call as lallus. Second is what we call as losers. Third is what we call as laggards. Fourth is what we call as leaders. And fifth is what we call as legends. So I think the aspiration for every startup is to evolve to being a legend. But that journey is a very long and arduous journey. That journey requires a lot of sacrifice and the ability to overcome a lot of challenges.
You talk about unit economics, and when I sit as an investor, we want to know a robust unit economics model. When you wear the hat of an entrepreneur or a startup, when we push hard on unit economics, are we doing this at a sacrifice? Are we doing it at the sacrifice of growth? Are we doing it at the sacrifice of getting that market share? Are we losing positioning in the marketplace, right? So how do you make the decision as a startup entrepreneur saying, do I need to fine-tune my unit economics or just grab market share?
I think the fault probably lies in thinking that they are mutually exclusive. Unit economics and market share are not mutually exclusive. If you are grabbing market share only on the promise of severely compromised unit economics, then that is not a sustainable model. When I talk about unit economics, I do not mean that you have to be profitable from day one, but there are key elements to being profitable which you need to be able to demonstrate even if you are not profitable. So you should be clear of how your costs are going to evolve and how operating leverage is going to work in your favor. With those two on your side, hopefully your unit economics will keep getting better. What is most important is that every marginal unit of capital that you're consuming and every marginal customer that you are adding should be able to give you better unit economics than the previous one.
That's a great point, Utpalji. Should a startup consider the end game? Is the end game important as you build the business, as you're thinking, or as you said, going from venture to being a company, right? Is the end game important?
It depends on what end game we are talking about. A lot of startups that we see are talking about an end game in terms of the next funding. And that, to our mind, is not the right end game to be focused on. It's always said that, one can either focus on competition or one can focus on customer. However, for most startups, they are either focused on competition or the customer or the capital provider.
Well, on that note, it's time for us to head into a short break. But coming up next, how did India Swiggy in 2022? With normalcy returning and new trends in food emerging, what were India's most palatable dishes? We speak to Rohit Kapoor, CEO Swiggy Food Marketplace, on the other side to find out just that. Stay tuned.
Welcome back here with us on Startup Street. Did you know that biryani was the most loved dish in 2022 for the 7th consecutive time with 2.28 orders placed per second? Yes, you heard that right. Now, if biryani was the most loved dish, what was the most loved snack or dessert? To understand which dishes had the nation in a tizzy, I'm now joined by Rohit Kapoor, CEO of Swiggy Food Marketplace. Thank you, Rohit, for joining us on the show today. Now, in the report, Swiggy has mentioned that old and new trends followed in food, grocery and errands delivery in 2022. Could you please elaborate on those trends for us?
Thank you, Aishwarya, for having me. There are some trends which are eternal, looks like, in India. So biryani, for example, for several straight years has continued to be the #1 ordered dish. And I think it's a universal phenomenon. We find biryani being loved across the country. I have a veg biryani, which many people say is not real biryani, but that too sells very well. Second, masala dosa is the second most ordered dish. Okay. And when it comes to snacks, nothing beats the samosa. Okay. Right? So these are some of the trends which have just stayed on, and I think show the food we love. But we're also seeing very interesting trends come up this year. So for example, we find orders for Korean bowls, we find orders for sushi. I think what's happening is it's also because of the creativity of the Indian entrepreneur. There's so many people who are constantly experimenting with food, bringing in international food and giving it also the local flavor, and consumers are lapping it up, looks like.
Okay. What did you order the most on Swiggy?
Chai.
Chai. All right. But I want to understand from you that what is the reason behind this unwavering popularity of biryani in India? And while we're still on the topic of the food, tell me, other than biryani, what were the most ordered dishes on Swiggy in 2022?
So on biryani, I've asked this question often to teams. I'm not a real biryani expert, but here's what I hear. Is one, it is available at every price point. You can get a 100 rupee bowl of biryani, you can get a 800 rupee bowl of biryani, right? So it's egalitarian, it cuts across segments, one. Second, it travels well. It's easy to pack biryani and just ship it across. Third is, it is a food which has now become sort of adopted by different states across India, looks like. That's on biryani. I think the other trends that we've seen is gulab jamuns, 27 lakhs sold this year on Swiggy. So that never falters. We saw 23% growth in people opting for guilt-free or healthier options.
You know, in terms of midnight cravings, what kind of orders did you see getting placed on Swiggy?
All kinds. All kinds. I think one of my biggest discoveries was that people order chole bhature at 6 a.m. Right? We have data and it's fantastic. It's such a I love my own chole bhature, but all kinds. But typical use cases are people studying, people watching a match at night, some people who work. I think a lot of India works all night. Correct. Right.
Now, I also want to understand from you that where did you see majority of these orders coming from? How have the cities performed in terms of ordering on Swiggy?
The top cities continue to grow very well. right? But just we added 100 cities this year in 2022 to where we extended our services. Some of the new places are doing fantastically well. We launched Port Blair, right? And we launched multiple other cities where we're seeing growth. So ordering food online is become very integral to India now.
What was also interesting was that 85% of people have used Swiggy One. So that's actually massive. So I want to understand what kind of savings have they made with cities use Swiggy One the most as a offering.
So Swiggy One is operational in more than like 40 cities in India, right? And it is a very loved program because frankly people love several features in it. And let me tell you, one is of course you can get free deliveries, you get special offers. But a big integration which has happened recently and people who are using it are loving it is the dine out integration, because once you're a Swiggy One member today, you also have access to dine out, and the kind of discounts you get there and the kind of offers you get are very, very strong. And the repeat rates we see on Swiggy One are quite phenomenal.
New Year's is coming. I know it's a big time for you. It's a big event. What's going behind the scenes? How is Swiggy prepping up to handle such large volume orders? And what are your expectations? What kind of sales are you expecting to clock?
So New Year's prep is a 2-month process, right? Yeah. Because it's a peak day. Everybody is sort of excited about bidding goodbye to the year and also welcoming the new year. And it's a thing which everyone becomes a part of. So for us, it's serious stuff because we have to really ensure that we are putting our best foot forward. Right. So just to give you some numbers, I think 2020 our peak orders per minute was 5,000. Right. Last year we saw 9,000 orders per minute, and this year hoping to cross that by a significant distance.
Now, you know, since 2022 is coming to an end, a lot has happened in the startup ecosystem this year. I want to understand from you, Rohit, what have been your top learnings for Swiggy in 2022?
If I look at India as a market, actually the market is doing well, right? If you look at consumer demand overall, it's decent, right? In the short run, do we need to make some changes? Have we learned something? The ecosystem has learned something? For sure it has, right? And a lot of it for the good, because I think it goes back to basics, saying, am I serving my consumers well, right? Am I deeply passionate about that or not? I think one thing I can tell you in Swiggy that drives us almost at a crazy level. So 2022 felt tough. 2023 is forecasted to be tough for the consumer tech segment. But frankly, if you're in there for the 10-year haul, these are all things you take in your stride and move forward. You'll see constant innovation coming out from us. That's who we are. That won't stop.
Okay. One final question. Now, there have been reports, because while we were talking about 2022 and we've seen how it's panned out, layoffs has been a major part of it, right? So now there have been reports that said that Swiggy is supposed to lay off 250 people. Could you share some comments on it? Is it true? And if it is, then what would be the reason behind it?
So, look, I think this specific news which came, I have nothing to comment on that, right? But I can just tell you one thing, that as a company, I don't think we get caught in by if the world is doing X, you have to do X or otherwise. Okay. We have our own distinct culture. We have our ways of operating. And when it comes to employee, I think it's a very, very employee-first company as well. So whatever happens, whenever it happens, we'll do it, we'll keep the culture at the middle of every decision we take.
All right, Rohit, thank you so much for speaking to us today. It's been lovely interacting with you, and we wish you the very best of luck for all your future plans, and a very happy new year to you.
Happy New Year in advance. Thank you so much.
And with that, it's a wrap on this edition of Startup Street. More news and update coming up on the other side.